listening to Radio Sputnik. Telling the untold.
Fault Lines.
And we are back. You're listening to Fault Lines with Thomas and Stranahan, talking high-tech everything, apparently, this section of the show this morning. Let's bring in our guest, Steve Grumbine. We're going to keep that going. Steve Grumbine is a political, economic, and social justice activist and founder of Real Progressives and Real Progress in Action. Those are a 501c3 and 501c4, respectively, dedicated to education and advocacy for modern monetary theory. And you can follow Steve, by the way, on Twitter at @SDGrumbine and at Real Progress US. Steve, we're talking cryptocurrency, specifically their decline, and I would not call this anything close to a demise, but the decline of cryptocurrencies, whether you're talking about Bitcoin or, heck, Ethereum and Dogecoin. Dogecoin being, of course, the meme coin, the joke coin that Elon Musk has so heavily, the argument is he's inflated it. He flipped from Bitcoin to Dogecoin, and then he seemed to back off cryptocurrencies as a whole. Anyway, I don't need to get too inside baseball with this kind of thing, but we're talking about this. And where I will go with this, we have often spoken to you about what cryptocurrencies actually are, whether they're currency or not, whether currencies can be commodities. There are all these other conversations that we've gotten into, and in some depth in some cases. But here's where I'll start us off. How much of the value of Bitcoin do you think comes from people thinking that it is a currency versus viewing it as an investment vehicle or a commodity? I think most people, here's where I'll start it before I pass it to you. I think most people view it simply as an investment, but I might be wrong. What's your take, Steve?
I agree. I agree 100%. I don't think anybody's thinking, wow, I can replace dollars with this. I think they saw the meteoric rise of Bitcoin when it shot up to the moon, so take Doge terminology there. And let's be fair, there has not been a lot of good news in terms of opportunities for investment for regular Jane and Joe six-pack. And here's an opportunity within the squalor of society to maybe make some money real fast. And the volatility of cryptocurrency, if you all you got to do is open up your crypto.com wallet and track a few of them. And if you blink, it goes from $800 for your 1,000 coins to 22 cents the next minute, just all over the place. So you go to bed at night feeling good. You wake up the next morning, like, what the heck happened to me?
What's going on,
so
Steve?
It's truly a speculative thing.
But why is it so speculative? Like, the value fluctuates radically. I mean, like, the value just plummeted recently. I mean, there was a massive sell-off yesterday. So why the fluctuations? Why is it so... I've said it before on the channel. I don't necessarily trust cryptocurrency. And this is kind of, on some level, this is in part why. Why the volatility? Well, why such volatility? And it seems that this is normal, if that makes sense. This is like normal volatility.
It is absolutely normal volatility. So the fair value of Bitcoin is zero. Okay, there's nothing there. It's like literally an empty hole. And so because there's only so many of these empty holes out there, it's, got a scarcity factor. But what happens is that people buy low, and as soon as it goes up, you have people that say, hey, it's time to cash in and get my US dollars out of this.
Oh, I see.
They go ahead and sell off. And then the next wave says, now it's plummeting again. Maybe I should buy.
So it's just a pump and dump.
And that's it. And so what ends up happening is it's recursive. It keeps doing this back and forth. You had a couple very important news things that happened, though, that drove the cost. Obviously, Elon Musk saying he was going to invest $1 billion to host, to be able to accept payments in Bitcoin and so forth. That put it up in the air. And then when he said, hey, it's an environmental hazard, that took the wind out of the sails, and you had that. But you also had a couple other key things, if you think about it. Right here, right now, we're dealing with tax season. And as I've told you guys on other calls, you can't pay your taxes in Bitcoin. And so a lot of people are looking to, because of the delays in the payments and stuff like that, they were looking to cash out their crypto holdings to pay off capital gains tax hits that they were going to be facing. Because let's be fair, these are all going to have a major capital gains hit for those people that, were able to win in this speculative market. Friends of mine who bought Doge, they bought it like, say, 22 cents, shot up, I think, to 84 cents at one point in time, somewhere in that vicinity. And I think that everybody was like, to the moon, it's going to hit $1. And then all of a sudden, like they pulled the trap door. You were down in the rancor. It was a tough fall. So I think this is the nature of betting on a speculative commodity that has no real anything to it. So it's an interesting world we're in.
I mean, it's not even like a government issue. Like, so it doesn't even have that. Like like money is conceptual in and of itself, but it doesn't even have like the underpinning of the government to ensure the full faith and credit of the United States. Yeah.
Yes, the legal framework of a currency issuing government provides a lot of stability, and when you think about bond holdings and things like that, that provides even further stability because people don't want to see that thing volatile. But the flip side to that is that the difference between a currency is the government does set the price. And by setting the price and making it not a speculative commodity, it adds that layer of stability that you need to have in a currency environment. And that's exactly what you see is not there for crypto. Now, I want to say there is a lot of cool stuff coming with digital state public currency. And guys like Ron Gray are at the bleeding edge of things like that. Ron Gray of the Modern Money Network. These are folks that are watching the technology. It's the underlying technology that's so fascinating. Anything that you can speculate on, going back to Beanie Babies and stuff like that, and baseball cards. I mean, all of these. This is not anything new. It's just a different flavor of the same thing. But there are people out there, and this is the strange thing, and this is the part that I never quite understand because I don't think they understand. The idea of doing away with central banks and the idea of doing away with the dollar, and it's just a lot of people out there that have listened to one too many late nights with Max Kaiser that don't really understand what they're talking about, and they get excited, and it creates this other narrative, this almost Alex Jonesy narrative that I think is really counterproductive to understanding what's really at play. And I think Shane nailed it. It really is. Most people are doing it as an investment because of that volatility. If you're there at that right time, you hit
it
the
would be a
sell
good
button.
investment. I mean, you can look at it. If you're the kind of person who normally puts your money in an index fund or in the stock market somewhere, invested in particular companies, if you're used to the stock market and you look at the crypto space, what you will see are dramatically different charts pretty much across the board for any given coin that you're looking at. If you look at Bitcoin and you look at the value of where it was a year ago and how much money you could have made, say in March, if you started investing, a lot of people look at that and their eyes perk up, and nobody blames them for if they make the money out of it. Everybody else is forced to grudgingly go, well, okay, good job. There you go. Good job, kid. Whatever. Pat them on the back. Whatever they do, because it would be extremely impolite to slap them upside the cheek or something like that. So nobody does that. But at the same time, that is the Alex Jonesiness that you talked about that it has become is not its origins. If you go back, I remember talking to people. This comes out of creative and brilliant hackers, frankly, in 2011, 2012, and earlier, who were looking at alternatives to the currency system. Even the company PayPal, which of course we're all familiar with, had its origins in this attempt to build an alternative digitalized currency that the world could be run on. And this is an old debate that it seems almost silly to me to get into. But if a given country were to replace its currency with a cryptocurrency-esque one, where there's a fully digitalized currency that is run and verified, through some sort of blockchain system, and if they decided to take in taxes for it, and if it had monetary policy controls, that kind of thing, I could see that working. But what's built into it is the idea that there is a currency component. It's called cryptocurrency after all. It's not just called crypto or crypto assets or whatever. The idea that these are currencies, it seems almost just one fiat decision away from being the case. But Steve, if you had to give a brief point for those who haven't heard your take on this before, what is it that keeps it from being a currency? Just to give a brief summary here.
Well, I really think that you're going to see it's not going to be a crypto. It'll be a digital-based, blockchain-based state public currency. You will see this. It will be coming. You can tell there's so much work being done right now. The technology is never the issue. It's the speculative nature of it. It's the lack of the ability to levy a tax and be able to maintain that stability of the system is what the private misses. And so when you see, think about it, most people think of paper dollars as a dollar, but in reality, a dollar is a unit of measure. So it also shows up digitally too.
And these unit of measures is changing with exchange rates. If each currency is its own unit of measure, or the unit of measure for the goods and services relevant to its economy, that kind of thing. It's weird because we exist in this sort of quantum reality where the metrics we're using for our reality are themselves changing, in relation to one another. And so you have this sort of kaleidoscopic shifting on this deep level that, it's fundamental to how currencies even work simply. Anyway, Steve, we've got to close this out. I want to thank you for joining us. Steve Grumbine, political, economic, and social justice activist, founder of Real Progressives and Real Progress in Action. Those are a 501c3 and 501c4, respectively, dedicated to education and advocacy for modern monetary theory. Steve, thank you for joining us this morning. Great conversation.
You got it, guys. Have a great one.
Hey, you too. And we're closing, but one last quick note here. The things that make a cryptocurrency a useful investment tool also make it potentially not as useful currency. The volatility, the fact that you have this changing value means that it's it's
all over the place.
It's all over the place. Yeah, which makes it less trustworthy. Anyway, we need to go out. You guys are listening to Fault Lines with Thomas and Stranahan. We'll be coming back on the other side of this short break.
Fault Lines.